Very, very good afternoon, ladies and gentlemen. Thank you for joining my show. It's been a wonderful episode today. Especially, I've got a lot of invite and a lot of questions from all of you because we have a very, very special guest today. Somebody who's my role model, and I'm so excited to welcome Mr. Ashish Chauhan. He's a technocrat from IIT and IIM, currently working as a MD and CEO of BSE, formerly known as Bombay Stock Exchange, with market capitalization of listed companies close to USD 3 trillion. Ashish is one of the founders of NSE National Stock Exchange and is considered the father of modern financial derivatives in India. Due to his work there from 1993 to 2000, he's also been the creator of Nifty Index and was a change and creating the first screen-based trading. He has won several prestigious Indian and international awards over last 3 decades, including Digital Icon of the Year, Asian Banker, Top 50 CIOs in the world, and he also serves as a board of the prestigious Indian University. What an honor and privilege to host you, sir. Thank you for joining my show. With that, my first question to you, sir, I would always wanted to ask you this question. People say that being an IIT and IIM alumnus, you are halfway there. Do you agree to this, or how did you navigate that, prestigious institute stamp to make such a big dent into the professional world?
I think it does help to be from prestigious institute. So one should not kind of discount that. But again, the first job is what you get in a prestigious organization, in a good organization when you are from sort of good institutes. Usually that's what happens. That doesn't mean that everyone is able to get salaries of worth crores and all. I started my job with 3,000 rupee salary. In those days, we were just 4 months before the liberalization happened. So 1991, when the placements happened, we were already in the license Raj. And so our salaries were also license Raj salaries. And so once you go into the job, then it depends on how hard work you do, what kind of results you get for your organization, and what kind of things that sort of come your way. So I would say it's a mixed bag, but being from good institutes really help people have opinions about you, that you would be good. And I think that itself is a great stamp which you carry. So overall, I think the IIT IIM stamps helped me a lot. And of course, alumnus network, that is also helpful because wherever you go, even if they are not from your batch, they are 10 years senior, 20 years junior, you still have the same love and affection and open arms which you meet each other with. So I think the alumni network, even not of IIT Bombay or IIM Calcutta, but even other IITs or other IIMs, you get accepted much faster than a normal person would. That's what I would like to presume. But overall, once they know you, it's about what you do, how you do, what results you get, and how sincere you are, how honest you are. Those things matter much more. So I wouldn't say that if you are not from IIT or IIM, you don't get that. In fact, there are so many people doing a great job who are not from IIT IIMs. And for me, that's why it's always good to be from there, but that doesn't mean that you have to be from there to do a good job, right?
Yeah, beautifully answered, Ashish. In fact, I think it helps you to give a landing, but at the end of the day, how well you are able to row the boat in the career path, and that eventually, decide your destiny. Thank you so much on this valuable piece of information. Now, Mr. Ashish, I just wanted to understand, since you joined BSE in 2009, you helped BSE to become the fastest growing exchange in the world with 6 microsecond response time, completed its IPO, revived its revenue, introduced mobile stock trading to India. You diversified in the areas such as currency, commodity, equity derivatives, SME, startup, mutual fund distribution, and many more such milestones. How did you make such a huge difference? And what has been your success formula that you can attribute to?
Anyway, it's a part of the job. And there is nothing special about it. You continue to evolve yourself based on the newer things that happen, newer instruments that come about. And when I joined the BSc, one of the reasons why I was taken, in fact, the BSc bought the company which my family owned in the software for stockbrokers. And that's where basically they wanted to clearly have derivatives to be brought in because I had a reputation in derivatives. And I also had reputation in the IT. So they wanted me to upgrade their IT systems. I joined as a deputy CEO, and there were clearly two asks from me. And all these things don't take, they don't happen in a short time. They take a long time. And a lot of hard work that happens, not only of one person. No Sachin Tendulkar can win a test match, right? It requires 11 people. And that's where basically the entire team worked hard for changing the technology of BSc. I think BSc is pretty much the only organization in the entire country which has changed its technology. It's easy to go from manual to automation, but it's very difficult to go from automation 1 to automation 2. Many people have tried, failed, while as BSc has been successful. So in a way, we are happy that we have been able to do that. And of course, once you set up a new thing, then you are able to also maneuver it faster, better. And that's where we started with, when I joined BSc, we used to have like a 200 milliseconds response time. In 1 second, there are 1,000 milliseconds. So we were giving response time of say, 1/5 of a second. And when we started with the new technology in 2014 and 2015, we are giving response time of around 200 microseconds. So we had gone uh, in speed up by 1,000 times because there are a million microseconds in a second, 10 lakh microseconds. So we had gone to 1 by 500th of a second. And then we worked hard to basically make it into 6 microseconds. So again, a 30-fold jump. And of course, the scale also. Earlier, even if you got 5 to 10,000 orders in a second, we used to kind of have a breakdown. Now we are able to handle 500,000 orders in a second without a change. So that's where basically the new technology does help. And of course, the mobile was up and coming. So we ended up trading mobile. We also end up doing algorithm trading. New instruments were already allowed 2000 equity derivatives were allowed, 2007 currencies were allowed, but BSc did not participate in those days. So finally, we had to bring them on to BSc. So today, we provide the entire gamut of currencies, interest rates, equities, and so on and so forth. That's where basically idea is you continue to evolve, continue to benchmark yourself with the competition, with the rest of the world, and see what is coming and prepare for that. That's what basically the job is all about.
Beautifully answered, sir. In fact, how do you challenge the status quo continuously while on the job? And that makes all the difference. And who could be a better replica than you to kind of prove this point? How brilliantly things have shaped up, during your tenure. I also wanted to ask the next question that Bombay Stock Exchange has hit a record $3 trillion investment. I remember it reached around $1 trillion in 2007 and about $2 trillion in 2017. In last 3 to 4 years, what have been the big changes and the nature of retail participation that made that record number of $3 trillion?
Again, India is on a growth path, but and we reached the 1 trillion mark pretty early in 2007, as you said. But then there was world financial crisis that came about. So 2008, 2009, 2010, all of them in a way went just repairing what had, the damage had been done. And then 2011, 12, we had several acquisitions on the central government those days. And so effectively, we had a very tough time in the markets. And the way I look at it is the markets returns don't happen continuously. You don't get continuous returns like what you get in fixed deposits or other things. You get what I call clunky returns or chunky returns, where basically returns come over, say, 15 days or 20 days in a year. And then for the rest of the year, you are actually having markets going down a little bit or just staying there where they are. And that's what continued to happen until 2014. Before that, markets started going up because the the new government was expected to come, and then when the new government came, the index also started going up. And then we had demonetization, which ended up stalling the overall march a little bit. But due to the COVID, the markets actually went down drastically. From 41,000, they went down to 25,800, almost 40% down. And then when people realized that COVID is deadly, it is difficult, but India is doing better than what was expected, because India was supposed to do very badly with 300 million, that is 30 crore infections, and 100 million, that is 10 crore dead, as per our Indian experts of India, experts of Indian origin coming from US. That people were really frightened. That's why market went down. And slowly they realized that India is not doing so badly, so the market started going up. So today, as you rightly said, we have hit the $3 trillion mark, and given the way we have created our own vaccines, we are giving it to literally 40-45 crore people already by now. The world is watching. Even during the early phase of COVID in the 2020, we locked down fully, which saved a lot of lives. And we also sent medicines to a lot of countries, which also ensured that India has come out as a very responsible nation in the world. In the meantime, we also fought a small little war with China in Galwan Valley. We defended ourselves well. So overall, I think world is looking to India to lead it going forward. And India, in some ways, although with our per capita income being so poor, $2,000 per person per annum, compared to America's $66,000. That is 33 times larger they have, but their per million, per lakh or per million infections are much higher, almost 6 to 7 times higher than us. And even their death rate as a percentage is also very high compared to us. So either the Europe and West is not as rich as we think they are, or we are not as poor as we think we are. So effectively, that is how I see that scientifically, even in e-commerce, fintech. Today we are doing 3 billion transactions pretty much every month. If China doesn't do that, America is way below us. So effectively, in the soft infrastructure, we are doing really well. And I think all of us should be proud of the way we as society and all our governments, central, state, municipalities, everyone has managed this COVID well.
Absolutely. I think you portrayed the very key point about, our participation in uplifting during this, pandemic time, how India's contributed. We are a nation which is a huge, tremendous round of opportunity with, of course, per capita income will gradually is growing up. We are doing a 3 million transaction a day. That is the kind of benchmark where we are actually moving to. And we will definitely make it big in coming years and coming days. On that note, thank you so much for that brilliant thoughts and brilliant answer on that note. My next questions I wanted to ask you: how can we increase the average household saving in the capital market from the current number to more of a double-digit number, so that we don't need to depend on the foreign institutional investment that much?
No, it's I think a very good point. Last almost 2 decades, we have been talking about financial inclusion. And we were talking only, we were not doing much. Because there is what I call a talking circuit, where all of us spend a lot of money just talking everywhere. But nothing happens. And suddenly one day, things start happening. And that's what happened to India around 2014. The new government came, they we're trying to figure out actually how to do it. And they created this Jan Dhan Aadhaar Mobile Trinity, where almost 35 crore accounts were opened in 1 year itself, which had not been opened in literally since independence. And that's where I think it brought a lot of people into the financial system. And that basically opened up people who were never doing banking, people who were not doing any formal finance. They started coming into the markets. And that's where I think overall the markets opened up. And then the demonetization happened, which actually gave a fillip to the automation, because we were having 3G, then 4G, a very low cost bandwidth in every household. and that put India in literally 21st century. As I said, America is in 20th century. India suddenly moved on to 21st century. And that basically demonetization forced people to go for the new innovative mobile-based solutions like Paytm and other wallets and Google Pay and other things. And when the COVID came, it ended up giving even more fillip because we were already ready as a society to trade through e-commerce, mobile commerce. We didn't go through e-commerce in terms of the computer-based buying, selling. We straight away went to the mobile-based commerce because none of us could afford the computers, or not most of us. But mobile, everyone actually uses, right? And so that is where I think we started watching movies on our mobiles, and we started buying, selling things which we are never even thinking of buying. We start looking at them and stuff like that, right? So, but the commerce part of it helped. And so when the COVID struck, a lot of people were sitting at home, watching television, and they always had the aspiration to trade in markets, invest in markets, but they did not have time because markets work from 9 to 3:30, and that is also working time. So nobody got time. When they came back home in the evening, the market was actually not functioning. So they understood that this is right time they can get involved in the market, and that's where before COVID, I think around February or March, we had 4.9 crore investor accounts. Now we have 7.4 crore investor accounts, right? So literally 50% or more has come in over last 18 months. For 145 years, we worked hard to get that 4.9 crore. And in 1 year, we got like additional 2.5, 3 crore new investors, right? So you can see the lot of people, especially youngsters, and even ladies trying to invest in markets. Only my worry always remains is that it's like any other good thing, you can overdo it. And so when youngsters come in, or even people who are uninitiated, they come in, they start trading a lot because they watch television, they get tips, they get all sorts of advice. While as investment is not trading. In investment, you actually invest for 5-year, 10-year long horizon, while as buying in the morning and selling in the afternoon is considered investment now because watching all sorts of actions, you also get excited and you want to get into that action in one day. The company prices go up by 5% and 2%, and you think that is what you want to make free. It doesn't work that way. There is no free lunch, right? So if people are not experts, they shouldn't indulge in day trading, not even in derivatives, because in other countries, especially advanced countries like Singapore, if you don't have a minimum net worth of a few $million or something, and minimum education qualifying like MBA in finance, you are not allowed to even trade in derivatives. But in India, we allow everyone to trade in derivatives, then they lose money, then they start blaming the markets. So idea is do it systematically. If you want to become an expert, you are most welcome to come to BSc and trade every second. But if you want to enhance your assets by working somewhere else in other field, and you don't have time, you can go through mutual funds, you can go through portfolio advisors, you can go through investment advisors, but stay for longer period. Because if you trade incessantly, continuously, then what you basically do is you lose a lot of brokerages, and the chance of your losing out on the returns is also very high.
Very beautifully said, sir. In fact, I always have, there's a lot of questions pouring in. I will definitely ask you these questions at the end of the session. But on that note, I just picked out one question that in last 1 year alone, 35% investor increase with, what we have witnessed, right? Where you went from 5 CR to 7 CR investor base, 50,000 to a lakh investors being added every day to BSc, resulting to the largest, investor base in the country. How do you foresee this number growing in next 5 to 10 years?
In a way, what happens is, again, the number of investors go up and down based on the market function. If market starts going up, a lot of people come in. And when market starts going down, then people also stop investing. But the good thing what we have seen is the last 2 years, a lot of people have started doing investment in mutual fund through SIP and all, and they have got good returns, and they have got into habit of investing. They don't trade every day. They are investing in mutual funds or through investment advisors and things like that. So for me, the test of the markets, because the FDs are not giving great returns now, so people are not going into FDs. Gold is also stuck in the same region. So that's why they are coming into the markets. And if the interest rate remain low, then the markets will see even more participation going forward over next 5 years. Today also, with 7.4 crore investors, we are pretty much, we have added 50% in last 1.5 years compared to the previous 145 years. And somewhere on the line, I think 3-4 years, we can add probably a similar, so if we are at 7.4, 7.5 crore, probably we might reach 15 crore investor base or investor accounts. I wouldn't say they are all investors, because some of them also have double, triple accounts with different brokerages and other things. And so you will probably reach 12 to 15 crore investor accounts in next 3 to 4 years easily.
Wow, 12 to 15 crore investor account. That talks about a real volume. And then, in a growing country like India, when we are able to attract that much of investors, things will only grow from there on. Beautifully answered, sir. Wanted to understand one question that's been a pertinent questions for me for a while. In last 19 years, CAGR of market cap of BSE listed company registered around 19%. The market share is formidable, and you're probably the one exchange who maintain and operate the entire system in your own. So what have you done differently to stand out and keep this so seamless and effortless?
In a way, basically, our business is actually of running the systems, right?
Right.
Earlier, the floor used to be the system. So we had to maintain the floor. And today we have to maintain the IT, because the entire world has become floor. All the mobiles have become part of the floor, right? And so our core function now is managing the IT. And the change which we did over from 2009 and to 2015, it took a lot of efforts to change ourselves from hardware to software to applications to network. Every broker houses, every broker premises, we had to change the routers. And so it was like a very tough work. And people had written off BSE because NSE was kind of there. And of course, there were other new competition that was coming. So people thought BSE will close down. But the BSE team worked hard because they also wanted to survive. And we also brought in a lot of experts from outside to work for BSE. So now we have a very good team. And that's where basically what we decided is that technology being our core function now, we should have control over technology. And unlike other exchanges in India, now we maintain the entire software, hardware, applications ourselves. And we make them most of the time. We hardly depend on third parties for hardware and network related activities. But otherwise, we are in a way reasonably good at managing our own technology. It does pose a lot of challenges, because maintaining IT team is not an easy task, because there are other people who pay them very large sums. And so we have to continue to update ourselves, our employees in IT. And that's what we continue to do. So it's not an easy thing, even now, to maintain that level of efficiency, that level of sophistication, and continue to be the world leaders itself is a challenge. And you need to employ things which are low cost or zero cost. Like the entire trading system of BSE works on Linux, which is a open source operating system. And so we don't pay as much, even 10-20% of our competition at the same scale or same complexity. So they have to end up spending 5 times, 10 times, sometimes 20 times more than what we spend. on various things, and that actually keeps us competitive.
Beautiful. I think technology today, people say that technology is the best way to bring people together. And I think you have the way you have kind of evolved. It not only brought people together, invested together, it also, give us the confidence to actually, look up to the future, which is still so much bigger than what is today. So wishing you all the very best on that line.
Thank you.
On that note, sir, I wanted to understand, I remember in one of your session, you said that people get confused with the volume of trading rather than value creation of trading. So what is the value creation you are trying to inculcate, and how you are trying to do that? What is the roadmap for the same?
One of the reasons why I'm talking it to you is also to sort of put in that philosophy, and that's I told about not trading in derivatives or not trading incessantly. It's the same thing. See, many times we get impressed by people running fast, right? But if they're running on the treadmill, they're going to reach nowhere, right? They're going to stay at the same place by running fast.
Right.
Whereas even if a slow walker, if they walk on a road, they can go far, right? And so basically for me, getting impressed by people trading a lot, a volume of trading, doesn't get anything to any economy. It is only allowing people to trade because it's easy to trade or it's low cost to trade. There is low friction. But that doesn't mean that any value is getting added. Like I gave an example in one of my talks yesterday or day before, saying if you were having a company whose shares get traded like 100 crore every second for next 10 years, but it gets you no returns.
Right.
For next 10 years, no returns come out of it. The company makes no profit. Do you think that company is worth it? Vis-a-vis a company which trades not even 5 lakh rupees a day, but it's shares. But every month it's making 4, 5 lakh rupee, 10 lakh rupee profit. Then in 10 years time, you can see the value that they've created, right? And that's where basically it's like somebody going out of home every day, working very hard, but earning nothing. And everyone thinks that, oh, he's or she is doing so much hard work. But finally, earning is what counts, right? To run households. And that's why sometimes we mistake the activity for action. And for me, every investor need to understand that if there is no profit, then those companies, however much they trade, has no relevance. And if the companies don't trade much, but if they make huge profits and their profits are growing, then the wealth that you will create by investing in those companies for long term is going to be humongous. Like you can see Infosys, you can see Kotak Bank, you can see Reliance, right? Over 30, 40 years, continuously they have given returns. Whether they are trading a lot of shares or not, that's not important, right? What is important is whether they are making profits or not. If they are bringing profits, their profits are growing or not. Those are the things to look at. And as a small investor, what is your need, right? You want to buy 100 shares, 1,000 shares. You are not trying to buy million shares. So why would you want to go and worry about somebody trading million shares in a day or million shares in a second, except for just the curiosity part of it. But otherwise, if you want to buy, say, 2 kilos of atta, flour,
Right.
You don't go to Food Corporation of India. You don't go to Food Corporation of India, which has like 10 million tons of wheat. You go to the next door grocer only, who has a few boxes of wheat and atta, right? And that's what you want, because that's your need. And so sometimes you may get impressed by Food Corporation of India, but that's not your need. And why would you go? Nobody will see you there and stuff like that, right? So try to understand the difference between investment and trading. And trading gets you nowhere. Trading incessantly. But when you want to invest, you should be able to get in easily. And when you want to sell, as and when, after 3 years, 5 years, 1 year, whatever, that time you should be able to get out easily, right? That kind of liquidity is what you should be looking for, not infinite liquidity. And there is no infinite liquidity.
Beautiful. In fact, I've been listening to this conversation, and one thing came out beautifully through it. What you kind of said, that you innovated the tech part. It's not the way you're trying to inculcate this value creation. It's not only about the value creation solely, it's also value capturing. And I think it's not about the volume always, it's about creating value for your audience. And that stands in a long, long run. I love the answer. Thank you so much for giving so much of clarity. I wanted to understand, sir, how geographically diverse are your investors? Are you seeing tier two, tier three participation growing? It'll be good to know, on the number of transaction you touch in a month to get some kind of number on that. So what is your
Daily you can see in equities alone, we would be getting 50 crore orders in a day. Not that all of them result in trades. So the numbers, because it's so easy to trade now, a lot of people place orders. Most of the orders not come from, they do not come from humans. They come from algorithms, right? Now algorithms have in place. Almost 90-95% of all orders in India now originate from the algorithms, not by humans, right? And so for me, that is not relevant at all for an investor. But what is exciting for me, of course, the technology allows you, so that is also exciting. But more exciting is that people from Dibrugarh, from Jorhat, from Srinagar, from Ladakh, from Lakshadweep, people are investing, right? And youngsters are investing, housewives are investing, old people are investing in basically mutual funds and equities. And those are the more exciting things for me, that we need an investment culture. That is where the capital formation happens in the country. That is where the wealth gets created, right? And you get to participate in the country's growth. Whereas if you trade and no growth happens, no capital formation happens, no wealth gets created, then what is the point of these activities, right? And so that's where for me, it's very, very exciting now, and actually COVID period, where the automation is now being used to the fullest by even remotest people. And the stock market is one place which is so well organized that your money gets transferred literally in few milliseconds. Your stocks get transferred, your mutual fund units get transferred, and it's able to give you liquidity. I recall on March 23rd, 2020, Honorable Prime Minister announced the 70-day lockdown.
Right.
It was Sunday evening, and within few seconds, I wrote that BSE will remain open normally, as normal. And I got so much criticized in television and newspapers, and everyone was like, after me saying, why did you keep open everything when the entire world is going to come to an end? And I said, no, because we need to provide liquidity to people, and of course, government had worked in the background to make us into essential service 1 week before. And so we were having indications that they want us to keep open. But effectively, all our brokers worked hard. Everyone worked hard to give liquidity to people. So whenever you wanted money, we did not close market. It was easy for me to close market for saving ourselves and our brokers and their staff. But we worked hard as a system. Almost 10 lakh people are now employed in the stock market activities.
Wow.
Everyone worked hard along with banks to ensure that anyone who wanted to sell the shares or units, mutual fund units, they are able to get their money. And anyone wanting to buy are able to do that. But effectively, we provided what I call liquidity services to the nation. And that is where the markets, if you had closed down the market, you don't know what is the asset price you have. You cannot come out, right? What will you do? Right? And that's where people started appreciating after a few days. Markets went down, but they came up also equally well. And then they started appreciating them. No, this was a correct decision. But when it was taken, it was looking very odd that how stock market guys only want to trade and they want to speculate and all. No, this was basically in the interest of the investors, so that they are able to, because in tough times when you lock down, you require money sometimes.
Very true.
And you can see that you have a 5 lakh rupee portfolio, but you can't sell because market is closed. How frustrated you would have felt.
Mm-hmm.
At least some money came out, something you sold. Right?
Yeah.
And that is how some decisions look very counterintuitive. But overall, the governments also work very, very hard on all this, managing the society.
Absolutely. In fact, I think one quote, it reminded me while I'm listening to this piece of information, one quote came to my mind that, First, people will laugh at you, then they'll criticize you, then they'll salute you. I think the decision of keeping that BSc open during that lockdown period actually was an amazing decision, which kind of made everybody, the nation saluted, because I made a tons of money during that time when the market went down. And I
Wow.
think I had that confidence to do what I'm doing today, because the kind of money multiplied in a few months in a beautiful way. Thank you so much. I've been thoroughly enjoying this conversation. I think the single greatest age an investor can have is a long term orientation, and that came beautifully through this conversation, Mr. Chauhan. I'm going to tweak the question a little bit. You've been talking about markets and sex, investor. Now, I wanted to know a different part of the story. I know you've acted as a CEO of IPL cricket team for Mumbai Indians. How has that experience been? And what was the modus operandi there?
In a way, I was actually working for Reliance Group those days. I was the head of IT and
Right.
also public relations and all. And so when the cricket team was taken by Reliance Group, that time there were already people who were going to run it, the heads who were expert in branding and marketing. At some stage, I was given the charge saying that now you should run it. And I used to play cricket, and they knew that I have a lot of affection for cricket. I'm like a fanatic sort of for cricket. And so they thought this guy will give the Philip to the managing of the entire thing. And that's how probably it was given to me. But the way my job, of course, there was a cricket team and there are managers of cricketers and all those things. So my job was to actually create a business out of cricket. Earlier, the cricket was not done as a business. It was all associations which were distributing tickets. And even if they sold, it was fine. If people got facilities during the cricket match, it was okay. And we were used to watching 5-day cricket match. Then we were used to doing watching 1-day cricket match. And I had to do 3-hour cricket match. And you had to sell tickets, right? And plus, a lucky city would get a cricket match once in 2 years.
Right.
Even Mumbai being like a Makkah of cricket, it would never get more cricket international matches because there were so many claimant cities. While as in one month, 35 days, I had to sell literally 12 matches those days, tickets, and fill the stadiums. The stadiums were two, Wankhede and DY Patil Stadium, and Wankhede was half dug up for World Cup preparation. The new stadium was to be made and all. So effectively, it was very chaotic. But I had to make the business out of it. I had to ensure that people who bought the tickets, they get to sit in those seats, because many times, or rather most times in cricket, you bought the tickets, but people will be sitting and you would be able to do nothing. You have to go and stand behind. And that's where we had to create like a multiplex kind of a framework, get popcorn on the stands and pizzas when you're watching. So we created a lot of new things. Of course, the terrorism was at peak. So we had to worry about moving people in and out. We had to sell the real estate on the t-shirts, the marketing companies. We had to kind of sell the logos and earn. Sort of my job was to basically, once I'd run the cricket team, ensure their logistics happen, their travel happens well, all their food is taken care, and their masseurs are available, and then physios are available. But the other side was also to create business out of cricket. And so fortunately, it was an interesting experience. And then next year, we had to go with the team to South Africa for almost 70 days. So that was also very interesting time where I could spend time with the cricketers. In the first season, it was so hectic and very, very fast that I couldn't spend, and we never stayed together because I was in Mumbai, and so I would go home every day, while as they will go to the hotel. While as in Africa, we all stayed together. So it was a different experience. And at the same time, you have to understand that your job is to make or try to make money out of that activity, right? So it was not to play cricket, but to ensure your customers are satisfied, which is all the viewers, all the people who watch it through television, all your commentators, all your cricketers. These are my customers, right? And so
Right.
that was a different world altogether. But it was fun till the time I kind of stayed in Reliance. After that, I joined BSc in the third year of IPL. Then
Were
I
you?
became a spectator.
I know. I'm sure that will be a very amazing experience. Were you a cricket player from childhood as well? Like we all went played roadside cricket during our growing
Yes,
up
yes,
years.
yes. No, I used to be very, I mean, reasonably good in cricket, and I used to play in Mumbai also.
Wow.
When I came to study, and also I started doing job, I used to play corporate tournaments and also. Cricket is something I grew up aspiring to be a cricketer, but
Wow.
I couldn't become. At the same time, luck had that I became part of the initial team that set up Mumbai Indians.
Somehow people say if I have some dream and eventually there is a way you sort of be along with it, like with the Mumbai Indians team and then doing it. I'm sure you are like multi-talented, sir. You are like jack of all trades as well as master of all. I didn't know this cricket part of your story. So on that note, the last two questions before we take the live Q&A, you have won several prestigious award, Indian and international award, over last 3 decades, including the Digital Icon of the Year, Asian Banker, Top CIOs. You have also served on the board of the prestigious Indian University, including IIM, NIT, NITs, etc. I think recently also I saw your post on LinkedIn being the Vice Chancellor for Allahabad University. Amongst your many other social commitment, recently you've also taken up so many roles. I want to ask, and I ask this question to all my guests on my show, what has been your success sutra? What is your advice to the young audience ours? What made you to successful so much? What discipline did you follow?
One is, I mean, I don't think I'm successful, but whatever came my way, I ended up doing with the best abilities and sincerity and hard work I could put in. So I never shirked any work. If I was told to sell tickets of IPL, I would do that. If I had to do any work, I mean, technology work also I did. I was not a technologist. I was a mechanical engineer, right? So and that's where basically there is no, in a way, success sutra for me, but being sincere, being honest, taking whatever comes your way and giving it your best is what I do. Of course, the society has now given you important positions. So I try to also manage or provide my time as much as I can to social causes. So I get involved in sort of temple work. I get involved in COVID-related work. I get involved in education work. I like teaching, so I am also a professor. I mean, I've been teaching since 1998 in various Indian colleges, but I also now professor in UK colleges, in Nottingham University, in Ryerson, Toronto, a Canadian university, and now I've been also appointed as Chancellor of University of Allahabad, which is one of the most prestigious and the oldest university in India.
Right.
And so this is basically the society's way of giving you that honor, and also, of course, society expects you to contribute back. And I try to do it as much as I can within whatever time I have available. So that's how, I mean, there is no sutra in a sense, but idea is to work hard, sincerely, honestly, and somewhere in the line you may not make billions of dollars, but if you're sort of like me, you society takes care of you. I mean, I never started expecting to earn anything much in life, and somewhere today I'm in a better financial position than I started with. So I mean, I'm very thankful to the society for appreciating what I do and giving me interesting work, but they've taken care of me. I mean, every part of society, wherever I worked, there has been appreciation plus money, right? So I wouldn't say I have not sort of made money, but it is because you try to do something good, right? That is what makes you more satisfied.
Beautifully answered. In fact, the higher we are placed, the more humble we become. That is one quote came beautifully through this conversation. And being so successful, still you are very humbly saying that the day I know that the day you become more humble, that day you become that much successful. And we all, there are so many more people look up to you, sir. the kind of work you have done, the kind of way you're giving back to the society. It's a beautiful journey so far. And with that, the last questions I would like to ask before we go on a live Q&A questions. So the Bombay Stock Exchange, the Sensex, BSS Sensex of India is a lifeline, dating back 140 years before. It's been the oldest exchange. But you, after you sort of took over, you completed this IPO, you have done some amazing work on the SME side, startup side, the currency, commodity, equity derivatives. How you thought out of box and you brought such amazing innovation to this platform. Like everything you do it in a beautiful grace and smile. So what is that inspired you to kind of made a difference?
I think in some ways it's about team, right? As an administrator, you don't have to do everything yourself. And even ideas don't have to come from you, but you have to be sort of humble to listen to others, even from your competition, from other countries, other examples, and try to sort of implement in your area with your other colleagues, right? And that's what actually life is not, it doesn't require too much brilliance. What it requires is your open mind, right? And that's how I look at it, that my experience has been that you don't have to be the best brain in town, but you have to be the most sort of curious brain in town. You have to be the most humble person in town. Then people come to you, you listen to them, you try to add on that, you try to explain to them and kind of get the answers. And then you have to again tell them to do the same thing. Because although idea is theirs, you allow them to do that. Many times bosses don't allow you to do sort of newer things, right? And so what I learned from my bosses, when I was young, my bosses allowed me to sort of set up NSE, right? Do satellite telecom or screen-based trading, first time in India. And they had tremendous confidence in a 25-year boy, that was me, who was actually a mechanical engineer, not even an IT engineer, to do that. And so you realize that the bosses and everyone else also keep on watching you. And they give you sort of ideas, and they also promote you many times, right? And that's how life happens. You don't have to be the best of anything, but if you keep your eyes and ears open, mind open, be humble, you get to pick up other people's ideas and work with others to get it implemented.
Beautifully articulated. I think one very key point came through this conversation, that intelligence is actually the ability to adapt to changes, being an open mind, because once we learn to be open-minded and respectful to people, I think rest everything falls in place. And your leadership has actually given a beautiful witness on that. Thank you so much. We almost to the end of the conversation, we have been getting a lot of questions and answers. So if you are okay, if you are another 5 minutes, sir, we can. I know I have blocked your time for half an hour, but I just wanted to ask a few questions. There's a lot of questions came in. There is a gentleman called Ajay Sampath. What are BS's plan for a decade of digital companies and blooming startup companies which will go public eventually?
In a way, we started our SME market, then we started our startup market, because many times by reading newspapers, you may think that startups are all billion-dollar companies and everyone gets hundreds of millions of dollars of funding. In fact, 99% startups get no funding, and no venture capitalist actually gives them funding. So we created, and I have been a small entrepreneur myself, so I know how tough it is to get funding. And that's why if we can do it through markets from unknown people, I thought it would be a good idea. So that's how we started SME market. It has now done very well. Almost 335 companies have got listed. They've raised 3,500 crore plus money. Their market capitalization is now more than 30,000 crore. So this SME's initial phase have, over last 5-6 years, have done very well. And that is heartening, that Indian entrepreneur track, and most of them are not funded, small little people, right? And that is what basically markets are all about. At the same time, the companies which have been funded by large people and have taken billions of dollars, they also need to raise funds from the market and list themselves. So they're like Zomato, you might have seen last week, got listed. They raised 9,000 crores. So I tell, in fact, we also started an incubator at BSE, and that was so successful that we also then set up an incubator at Varanasi in Banaras University, BHU. And now we are setting up few more incubators using our CSR funds. So effectively, I tell entrepreneurs that if you want 1 lakh rupees, BSE will give you, or BSE will help you get it. And if you want 1 lakh crore rupees also, BSE will help you get. So at the same time, money is not made by BSE, right? BSE is only a platform. So those 7 crore investors we have, 7.5 crore now, including foreigners, they will put in money from in your activity or in your companies. If you have a good story, if you have a good backstory, if you have a good business model, and if you have some track record, they will put in money in you. And there are so many examples of that happening, because I have this firm belief that technology is going to change life fundamentally. And technology is also going to create wealth over the next 50 years that has not been created in the last 10,000 years.
Right.
And India missed out on the last sort of industrial revolution, that our GDP, which used to be almost 40% of world GDP, came down to 2% in 1947 when Britishers left, right? So we came down from the best economy in the world to pretty much the worst economy in the world, because we did not adapt to the new technology, new science, new ways of doing things. And now, after 75 years of our independence, 74 years, now we are basically pretty much equipped. We are in the right place at the right time, and huge wealth will be created. And if we don't, as Indians, invest in our own small little companies, large companies, then foreigners will invest. And when the wealth gets created by our companies, those foreigners will enjoy that wealth, right? So it's important for all of us to also invest in the companies, but invest, not speculate or not trade, right? So that's how I would put it.
I think you beautifully answered, sir. Thank you so much. There are thousands of people watching and there are so many questions. It's very difficult to pick and choose the right question, but I'm just picking up 1 or 2 good ones. So somebody came called Suresh Kurapatti. He came out with a question that, what is your suggestion for young investor who does not understand the market that well?
See, I think if you don't understand the markets well, you are, I think, on the right track, because most people don't understand the market well. In fact, people who come on television or who write great sort of articles, they also don't understand markets well. So I think at least you are humble. You have accepted that you don't understand it well, which is a great thing. And then you can take help from experts, like investment advisors are available. Then you can also go to mutual funds, because sometimes what happens is any company you invest in, you need to understand the company very well, about the company's products, company's markets, company's customers, economy, how it's going to work, how the world economy is going to work. All sorts of things you need to keep in mind. And many of us who have other jobs, we don't have that time. Even if we have the education to do it, we don't have the time to do it. So we may want to go with the experts. And if you have the time, you want to understand or you want to gain that skill, then you can listen to many courses that run by BS Institute or even other places. There are YouTube courses also available. There are paid courses available. So you can participate to understand. And everyone should have some knowledge of what is a company, how to read a balance sheet, how the profit and loss account works, what are the problems with those numbers, how people make mistakes, or how people cheat other people by giving wrong numbers. All those things you need to also understand. And then if you think you are ready about investments, then by all means you can do even investment on your own. But I would rather, for first few years, I would request you to have some guide, like when you learn to drive. Driving is a very hazardous activity, right? So you have somebody teaching you in the training school for 15, 20 days, 30 days, right? Then you get that learning license, and then you get a license. Similarly, here also, doing everything yourself may actually make you lose money and also give you wrong experiences.
Absolutely. I think beautifully articulated while I was listening to you. Investment is a knowledge which pays off in a best interest in the long run. So if you're actually, really interested for the investment, go to the courses which BSc offer and various other institute offers, get trained, get a coach, and start small, because the long term actually pays a long run, long benefit and long return in the long run. On that note, sir, the another gentleman called, I think, sorry, I'm not able to read the Mata Prasad. He's saying that, what are BS's plan for a decade of digital? Sorry, this is the question I've already asked. SEBI's various action taken in the recent past, making stock market job difficult and creating disruption, or do you think it is investor friendly, especially from safety point of view? Did that make sense, sir?
Yeah. So you answered your own question that basically, uh, if a child wants to basically jump from 2 feet height, it's okay. But if a child continues to jump from 20 feet height, then the parent have to do something to make it safe, and so that's what, whenever there is over speculation, a lot of over trading that happens, SEBI tries to come out with safety mechanism. They try to increase margins, or they try to tweak the systems which have been, there were loopholes in the system where people were able to, by putting 1 rupee, they were able to leverage themselves 200 rupees. And so 100 times more leverage actually ruins the person, because if the market moves by even 1%, you lose your entire principal. And that's why SEBI doesn't want the brokers to fund you, even for margins. Some brokers were funding and many times the child doesn't like it. They think it is a attack on their freedom, right? But the way ultimately SEBI's job is to ensure the market is safe and to the extent possible, because ultimately it's your money, your decisions. You make mistakes, but in India we have a peculiar framework, that whenever an investor makes money, it is their own brilliance. But when they lose money, they go after SEBI. That SEBI, now you get me back my money, and that's why SEBI is also a little more careful in allowing rampant speculation. Already, you know how much India trades every day, almost 50 lakh crore rupees a day.
Wow.
Now, when that is what I kept a secret is because if you get to know this, you will start thinking that what kind of business we are running, what kind of markets we are running. We are over trading. And that's where basically SEBI had to take such a decision. That doesn't mean that speculation has come down. People are trying to find some newer ways to overcome those hurdles. But overall, I would say that if you're an investor, this is all not going to hurt you at all, because you pay your money, you get your stock. SEBI is not even touching that. Only thing, when you are speculating, you are buying, selling derivatives incessantly. That is where all this intraday margins come into place. So for investors, this has no relevance at all. For speculators, again, if you are in what I call reasonable controls, then there is not an issue at all. If you're paying your own margins, then there is no problem. And there were also some brokers who were also using customer money for their own speculation. So SEBI has also stopped that. So many brokers don't like it, and they tend to tell you that it is against your interest. Like many Adatyas telling farmers that getting money directly into farmers' hand is against farmers' interest. Right? And so those kind of things happen. So we have to be really careful on what we wish for. Sometimes what we get, what we wish for, if come true, then it may hurt us, right? So be careful on all that.
Okay, ladies and gentlemen, I'm getting a lot of questions. I'm sorry I won't be able to take, because I have blocked Sir's time for half an hour to 40 minutes. It's already 1 hour. The last question, and before the end of the session, one question came from Kartikeyan. Is saying Sensex is a bubble game now, or is it going to grow consistently and be persistent with the growth? What is your expert feedback? And also the same person asked another question. Why one should choose BSc over NSC? I'm sorry, it's a tricky one, but
I worked for NSC. I worked for NSC, and I now work for BSc. So there is no, both are equally good. There is no special. Only thing is BSc is faster. They give you better service, and they focus more on investments. So if you are wanting to increase your wealth, then come on BSc. If you want to lose money, then go somewhere else. Right? That is how I would put it. And nobody can stop you from losing your wealth, right? So it's your choice, and how you do it is fine. And the first question was on that. What was the first question?
the first question was that, is the Sensex a bubble game right now?
Yeah. So in fact, I have been hearing this, that stock market is a bubble game since I was a child, right? And it was basically was called Satta Bazar. It was a very derogatory word. Satta is a derogatory word. Even Dalal is a derogatory word because of that. But what happened is in 1979, if you had invested 100 rupees in Sensex companies, today you will be owning 53,000 rupees, from 100 rupees to 50,000 rupees. Plus, all those companies give dividend over those 42 years, right? That dividend itself would be additional 17,000 rupees. So you would have 700 times more money, 70,000% extra in last 42 years if you have just kept 100 rupees invested in the Sensex companies, and when the index changed its companies, you had to just come out of those companies which changed and then bring in new companies. Only that much you had to do. No extra brilliance, nothing, no understanding. Why it happened is because India grew at average 6.5-7%, right? If you think that India is going to grow at 6.5-7 or even 10% over the next 25-30 years, then if you invest now, you will get similar returns as Madam said, probably 17%, 15%, which is way above any other asset class. If you say say look at FD, what does it give you now? 3%. Gold probably in the same period has given 10 times returns vis-a-vis the 700 times returns of the markets, right? So if Indian economy is going to grow, if the Indian population is going to become more productive vis-a-vis the rest of the world, you will see a lot of returns that will come from the market. And I don't see any other asset class competing on an aggregate basis. Of course, you may invest in a bogus company and that may go down, or you may invest in a seemingly good company and that may also go down. But if you invest in a portfolio like an index, then I don't see you will have any regret over next 40-50 years if India grows. So I am a bull on India, and that's why basically I think the markets will do similar, give similar returns over next 30, 40, 50 years.
Beautiful. Thank you so much, Mr. Ashish. I think your conversation has been so, in depth that, a couple of very important life lessons came out through the conversation. While investing, be a long-term investor, because investment is a knowledge which pays the best interest in the long term. And, I remember this quote of Warren Buffett: if you do not find a way to make money while you sleep, you have to work until you die. And there's a way to make money in the sleep when you invest in this, equity markets, stocks, because that gives you multiple fold of return. Thank you so much. It's been an honor and pleasure to host you. And I really appreciate for spending 1 hour on a Sunday afternoon with our audience. This is my 8th or 9th show, sir. And the kind of response I've got with the viewers has been enormous. My gratitude and my honor to host you. Thank you so much for being a part of this.
Thank you, madam. Thank you. So nice of you. And I hope this was useful to the audience.
It was very, very, very useful. A lot of learning, a lot of knowledge, a lot of life lessons, and a lot of clarity on the thoughts. Thank you so much.